This week we've been talking about the accounting cycle and trying to get better at the predictable steps in accumulating and communicating financial information to people who use it. So in Monday's lecture we talked about making adjusting entries on a worksheet and then later writing those adjusting entries in a more formal way in terms of a debit and a credit. It's important that we consider the importance of adjusting entries. Using a worksheet is not anything magic. It's the analysis that occurs in the adjusting entries that's the important part. Remember, some accounts were accurate. We don't change them. Some accounts were not up to date, and this is our opportunity to update them before we present that same information on the financial statements. Now, I think every homework problem this week had something to do with the worksheet. The first one, as I recall, you did the complete process. You made the adjusting entries, extended it, summed it, found net income, and made financial statements from it. Frankly, I wish all three problems had been like that. We needed that repetition. The second homework problem, you didn't make the adjusting entries, you just pretended that you did, and they extended it for you, or you extended it, and then you did financial statements from that. And that was okay, but you still missed the process of thinking about the adjusting entries. They gave you adjustments and trial balance and adjusted trial balance, and your dog ate the adjustments column. Was that the way it went? That was what I was thinking of. So you had to figure it out. That's one of those end of the week, know it well enough, inside out, backwards, forwards kind of problems that you can problem solve. What caused it to change from here to here? There must have been two of those changes because they come in pairs, debits and credits. You had to find them and write them down like journal entries. And that's good, but it's not the normal process of things. So one last time, I'd like to emphasize the worksheet for you. It's brief exercise 4.2 on 185. Is your book open? Read with me. The ledger of our company includes the following unadjusted balances. How about you looking at the handout while we read out of the book too? I took this information and made it into the handout. Prepaid insurance, $3,000. Service revenue, $58,000. Salaries and wages expense, $25,000. Do you see those numbers on the handout I just gave you? Say yes or no.
Yes.
Adjusting entries are required for A, expired insurance, B, services provided but unbilled and uncollected, and C, accrued salaries payable. Enter the unadjusted balances and adjustments into a worksheet. Well, that first phrase I already did for you. Enter the unadjusted balances in a worksheet. And then make the adjustments, which we're going to do together, and complete the worksheet for all accounts. Note, the book says you'll need to add the following accounts, but in real life you won't need to add the following accounts because I did them for you. Accounts receivable, salaries and wages payable, and insurance expense. You also found on your list in the handout, yes or no? Now, could we consider the order of the accounts on the handout? Were they the order in which I just read from the book's description of these entries? Did your eyes follow along and see if I just wrote them down the way I discovered them in this exercise I wrote? Or are they in some other order? There's some other order. Yes? Can you tell me why the accounts in the ledger, why the accounts on this worksheet are in the order they are? Seasway?
Assets and liabilities, so something like that. Like the top is.
That's a good start. Fallon?
Income and balance sheet, like income statement and balance sheet.
Is that the order they are, Fallon? Look again.
Well, balance sheet and
That's different, isn't it? You were on the right track. They're in balance sheet order and then income statement order. Another way to say that is they are in the order assets, liabilities, capital, revenue, and expense. Have you ever heard that list before?
Mm-hmm.
On many occasions. I wonder why. That's our tradition. We list balance sheet accounts and then income statement accounts as Fallon observed correctly. And they are the order: assets, liabilities, capital, revenue, expense. And instead of me writing them down as I ran across them in the exercise we just read, I decided to go ahead and put them in that order, because that's the order we would see them in the ledger. They would appear on the trial balance. That's just the customary way to work with it. So let's consider what the problem says and make these adjusting entries. It says, A, expired insurance, $1,800. If we look on the trial balance on the handout from the accounts given in the ledger, it says prepaid insurance balance is $3,000. Could I have a word to describe the balance of prepaid insurance before adjustment? Aha! I've stumped you. Well, let's think. What if I told you that the word I'm looking for fit in these blanks? Could we play a game of hangman here? How about you holding up your hand and being willing to guess one letter with me? Rocky, you want to go first?
A.
A. Who's going next? Fallon?
E.
E is a good choice. Hunter?
Come on.
Come on, Hunter, your hand was up. You got to pick a letter. There are 24 left.
T.
Are you picking or is she picking?
For me.
Did she not talk? She's hoarse today or something?
Yeah.
Hunter, what did you say?
T.
T. Who's going next? Matthew? Huh? D is in dog. Anybody remember the question? I was afraid of that. Give me a word to describe the balance of prepaid insurance before adjustment. I'm looking for a volunteer hand up. Pick me a letter. Come on. I'm being nice to let you volunteer. For Pete's sake, come on, go along with me. Pick one.
C.
Didn't hear you.
C.
C. Please.
I.
I. Come on. C's way.
P.
P.
V.
V.
H.
H. Isn't this fun? Y'all having fun? Come on, Corbin.
B.
B like boy.
Yes.
Matthew.
X.
Ooh, Matthew. Ooh. Ooh. Ooh, careful. Careful.
Oh, that's soft.
Who said that? Solve it.
F. Fixed.
That's what the part about being careful was. Oh. Huh? Yes, ma'am, you may. I don't know, can you?
Next.
Mixed. Okay, if that's Wheel of Fortune, Wheel of Fortune. Let's, are you, anybody listening? Let's play a little Jeopardy. Anybody remember the question?
What's a word?
Give me a word to describe
Prepaid insurance before.
the balance of prepaid insurance before adjustment. Didn't you hear this word twice in Monday's lecture?
Yes.
And you haven't thought about it since, have you? Well, maybe it was time we thought about it. A word to describe the balance of prepaid insurance before adjustment is mixed. And I think in Monday's lecture, I described the two component parts that were mixed there. Can you name them for me? Why is prepaid insurance mixed? Somebody?
Because you already have used up some of it.
Speak up just a little bit.
You've used some of it and you still have others.
That is correct. Good. So we had a beginning balance, we bought some more insurance, we paid more premiums, and then every day that passed, every tick of the clock, we're using up that insurance coverage. So that we acquired as an asset through the passage of time becomes an expense. Do we make an entry every second of the day to record that expiration? Yes or no? No. Do we make it at noontime and at 5 o'clock twice a day? Oh, just 5 o'clock at the end of every day? No. How about every Friday? Every Friday we make an entry for this? No. So time passes and a whole bunch of that asset has become an expense. And right before we prepare financial statements would be a good time to update these accounts. So we look at prepaid insurance mixed and decide that it's time we sort it out, but we need some additional information. So the problem says, anybody remember what the problem said? Read it to me, Matthew.
Adjusting entries required for expired insurance, 1,800.
Insurance expired 1,800. I'm wondering if one of you would volunteer to make me this adjusting entry.
Mr. Grego.
Would you volunteer for me,
Yeah.
Zach?
Okay. That 1,800, you're gonna put it on adjustments and a credit.
We're going to credit it for 1,800 and debit something.
The difference between 2,000
3,000 minus 1,800 is that 1,200, class?
Yep.
Yes.
So you're going to credit this for 1,800 and debit this for 1,200? Is that what I heard you say?
No.
Is that what I heard you say?
Yeah. Well, I did say that, but I didn't say.
Okay, let's just stop right there for a second. Just answer one question at a time.
Okay.
Is that what I heard you say? I think so.
Yes.
And the problem with that, you've discovered now, is,
That 1,200 shouldn't go in there. Debit.
well, do the obvious with me.
All
This
right.
is 1,800 and this is 1,200. Is that the right way to do this?
No.
Why
They
not?
have to even.
Down.
Debits and credits have to equal.
Yeah.
Okay, so we need to discover that. And I'm glad it turned out that way. Somebody else in the room was thinking that just now or might think it sometime in the future, and we need to quash that. Your adjusting entries are just like all the other entries they have to balance. There has to be a debit and a credit. But the other good thing that came out of this conversation already is there are two good choices here. It's either 1,200 and 1,200 or 1,800 and 1,800. Right, Zach? Now, we've all got to decide that. Y'all gonna let Zach do all your thinking for you?
No.
I hope not. You need to decide this on your own. So which will it be, Zach?
1,800.
Or 1,200?
I'm gonna stick with 1,800.
1,800 is Zach's choice. Have you made up your mind?
Yeah.
Let's vote. Everybody votes. If you think this entry should be made for $1,800, put your hand up. If you think this entry should be for $1,200, put your hand up. It's about 2/3, 1/3, maybe 3/4, 1/4. There's merit to both answers, but only one is right. Which is it, Zach?
1,800.
Why?
That's a good question.
It is a good question, and there's a good answer for it. There's something in the problem, one word in this description, that makes it 1,800 instead of 1,200. Zach, look again.
Oh, because.
What does it say? What did it say in the problem?
It's expired.
That is correct.
So you credit.
That is correct. Thank you. Good job. We're going to credit prepaid insurance and debit insurance expense for the portion that is expired. Now, Zach, let's think a minute. If 1,800 is used up, what remains? 1,200 remains. A good word to describe that would be, if 1,800 is expired, then 1,200 must be, Zach, somebody. I can't believe you're not gulping at this trough I just led you to. Lead the horse to the water, remember that part? Come on, one more time. If 1,800 is expired, then 1,200 must be unexpired. I heard fine. Oh yeah, I wish I said that. There's two things mixed in this account. The expired and the unexpired. And if you take the expired out, you leave the unexpired there, and where does that ultimately wind up on the worksheet? In which column? And then which column? Ultimately.
Oh.
Take it all the way. Where does prepaid insurance wind up on the worksheet? In the balance sheet columns. It's an asset, liability, capital, revenue, expense. Which is it? It's an asset. So it looks like an asset right here. But when we played the word game a minute ago, it was mixed. And through the process of adjusting and extending that and having it wind up in the balance sheet in a few minutes, that mixed account became an asset, and that's what we want to reflect on the balance sheet. Both the balance sheet and the income statement are better because we made this adjusting entry. Are you with me right this minute?
Yes.
What does the book say about the next tidbit of adjustment information? The book says, B, services provided but unbilled and uncollected. Everybody in the room is capable of doing this. This is not the first time we've made an entry like this. We made entries like this in chapters 1 and 2. Probably every week we've been together, you've made a similar entry. Would you volunteer and make me this entry, please? Paula?
You would credit and service revenue,
Is correct.
and you would debit in accounts receivable.
Is correct. The amount was, I forgot.
Amount, $1,100.
$1,100 needs to be debited to accounts receivable, and $1,100 needs to be credited to service revenue. There's a name for this kind of entry. Does anybody know the name of this entry? We learned the word in Monday's lecture, or let me say I introduced you to the word in Monday's lecture, but it was another subject matter. It was about salaries, the one we're about to do, where I used this word as the type of entry we made. Now, this same word applies to this type of entry. Anybody know that word? How come you're willing to talk to him, but you're not willing to talk to
I don't
me?
know what the word is. It's like accrual.
That's the word I'm looking for.
Okay.
Say the word.
I'm probably saying it wrong. Accrual basis.
Accrual.
Accrual.
Accrual is the word I'm looking for.
Oh, just accrual.
There's accrual basis, which describes all these things, okay? But this particular word is accrual. And what I tried to do in Monday's lecture with the 4 adjusting entries I chose to illustrate was say, some things we have to get before we use them up. We did supplies, we did prepaid insurance, and we did equipment as examples of things we got first and then used them up over time. And here's an example, salaries, of something that we get the good out of and then we pay for. Or, that's where we learned the word accrual. Or, this one. The problem said, we perform services for our customers, but they haven't paid us yet. Did I remember the facts correctly? So cash is happening after the event. We're doing the work, time is passing, and after all that happens, we get the money someday. Debit accounts receivable, credit service revenue, to recognize the revenue that we've earned but haven't received yet. We got an asset other than cash, but it's still revenue. There is another adjusting entry here we need to consider. C says, accrued salaries. There's the word again. Accrued salaries payable, $800. If you're willing to make me this adjusting entry, I'm willing to listen. Who will? Matthew, you willing?
Yes, sir. We would credit salary and wages payable by 800, and we would debit salary, wages, expense by 800.
Credit the liability account, salary and wages payable, and debit the expense account, salary and wages expense. This is the 3rd adjusting entry we've made. We're debiting the expense and crediting the liability because employees have worked for us and the expense we've incurred to them belongs in this time period, in the same time period as the revenue they've helped us earn. And we need to credit salaries and wages payable because we're not paying them at this point. We're admitting that we owe them. This is an accrual adjusting entry. The event is taking place and the cash is following that event. Now, this thought process of making adjusting entries to make accounts better before you prepare the financial statements is extremely important. You need to learn how to make these adjusting entries. The worksheet is just mechanical from here on. So let's combine the things in the trial balance column and the adjustments column to get adjusted trial balance. This is just a partial worksheet. It's a brief exercise. I'd rather do a long one to illustrate it. This is the best one I could come up with out of the book. There was no balance in accounts receivable. We just debited it for $1,100. So now its balance must be, everybody said? $1,100 debit. It's a debit, stays a debit. Prepaid insurance had a balance, $3,000. We credited it for 1,800. Shall I add or subtract? And get?
1,200.
That came up in the conversation that Zach and I had about expired and unexpired. And we learned to call this portion the unexpired portion. That's the asset. Salaries and wages payable didn't have a balance. We credited it with 800. That credit balance needs to be extended to the adjusted trial balance credit column. Service revenues balance was 58,000. We credited it for 1,100. I have two credits. Shall I add them or subtract them? And get 59,100 credit. Salaries and wages expense, excuse me, balance was 25,000. We debited it for 800. I have two debits. Shall I add them or subtract them? 25,800 is the new debit balance for salaries and wages expense. Insurance expense had no balance. We debited it with 1,800, and that gave it an $1,800 debit balance. Now, there would be assets before accounts receivable, and there would be expenses after insurance expense. We should have, if we had had the whole trial balance, we would have summed the two first columns, they would have agreed. We would have summed the two adjustment columns, they would have agreed. We would need to sum these two adjusted trial balance columns. We need the assurance of the accuracy of our work. We would want to sum those before we went further. And I hope that you did it that way correctly in your homework problems. Now the question is, on which financial statement should these accounts appear? We are not dealing with the debit or credit balance of these accounts. We've already decided on that. We're not overthinking this. We're not saying what's the normal balance of these. We're simply classifying them whether they go on the balance sheet or the income statement. It's as simple as that. May I have big hearty responses from you? Accounts receivable goes on the
Balance sheet.
Its balance was debit. It remains debit, $1,100. Prepaid insurance goes on the
Balance sheet.
as a debit. Salaries and wages payable goes on the
Balance sheet.
it's a liability. It goes on the balance sheet. Its balance was credited in the adjusted trial balance column and remains there. Service revenues balance goes on the balance sheet or the income statement.
Income statement.
It's 59,100 credit. Salaries and wages expense goes on the its balance is $25,800. And insurance expense goes on the
Income statement.
as a debit of $1,800. Now, again, this is a brief exercise, but I still think we got to talk about some of the big issues on a worksheet and some of the mechanics of it. I don't like to have to say things like this, but I want to tell you that on the exam in 2 weeks, there is a worksheet. You would think that I wouldn't be able to ask you to do a big procedural thing like a worksheet on an exam, but I see it as nothing more than a multiple choice question. If you think about these extensions, let me do it this way. Perhaps possible answers might be A, B, C, and D. Do you see the point I'm trying to make? So instead of giving you a blank worksheet and having you fill it all in, that would be difficult and time-consuming to grade, I'm giving you a worksheet with perhaps the adjustments column missing and some additional information, but then choices already extended to the multiple choice columns. And you make the adjusting entries and then choose the right extension already given there in multiple choice format. Now, I'm not in the business of telling you what's on the test, normally. Not in that kind of a sentence. I think I told you what was on the test when I prepared the syllabus, and when I decided what to say in lecture, and when I decided which exercises to assign for homework, and when I chose which exercises to work in class to demonstrate those things. I think I'm sending messages all the time, hoping that you're paying attention and learning. But sometimes it would be beyond your imagination to think I could ask you to do a worksheet. And I thought this was an appropriate time to give you that clue about the test. Not that I want you to memorize how to do a worksheet, but neither do I want you to neglect how to do a worksheet, thinking, oh, there's no way he could ask that on the test. Are you with me right this minute?
Yes.
Just put that in your memory bank so that when you're preparing for the test, you'd try to practice a worksheet and make sure that you were mechanically able to handle it. Do you have a question about this topic before we move on? I'd like to do another exercise with you. It's 3.7. It's on page 133. I hope you'll turn there with me. Remember, this week we're covering chapters 4 and 3. I thought we ought to spend a little time on at least one exercise out of chapter 3. And lo and behold, it's about adjusting increase. Exercise 3.7. It starts at the bottom of page 133 and spills onto the top of 134. Read with me. The ledger of our rental agency on March 31st of the current year includes the selected account shown on the next page before adjusting increase had been prepared. What a nice trial balance, or partial trial balance. It's not all there. There are no totals given there. It came out of the trial balance, unadjusted. An analysis of the account shows the following: 5 tidbits of information, instructions. Prepare the adjusting entries at the end of the month, assuming that adjusting entries are made quarterly. So it's in the end of 3 months. These are balances at March 31st before adjustment. We've got 3 months of adjusting entries all rolled into one to make them. If you need some additional accounts, here's a list that you can refer to in the exercise. The first of these adjusting entries is the statement, the equipment depreciates at $400 per month. I'm wondering if one of you would volunteer to make me the adjusting entry for equipment depreciating at $400 a month. May I have a volunteer? Yes, ma'am. Ashton.
Okay. You would credit equipment for $1,200
And debit?
and debit depreciation.
Debit depreciation expense and credit equipment is conceptually what we want to do, Ashton. That's a good answer. From Ray Gregg's opinion, because I can reason. That's a good answer. Is anybody listening to me right this minute? Even those of you that know this could be improved? Did you hear me say that's a right answer? If this had been supplies, it would look pretty much like she described it. Debit supplies, expense, credit supplies. If it had been prepaid insurance, like on the worksheet we just completed, it'd be debit insurance expense, credit prepaid insurance. But we've chosen to not reduce equipment directly. We've chosen to protect the cost of the equipment. We always want to know it. So we've chosen to reduce equipment through a related account with a different name. Ashton wants another try.
Is it accumulated depreciation?
That's a question.
You would credit accumulated.
You would credit accumulated depreciation. Way to go. Some of us are curious about how you got $1,200.
Because it said it was done quarterly and it was $400 each month for 3 months.
There's 3 months here that we're recording. It's $400 a month. So there's $1,200 of benefit we've received from this asset. And we're calling that depreciation expense, and it's increasing accumulated depreciation. I don't know when it's the appropriate time to do this, but maybe it's now. Let's talk about this timeline as being the total cost of that equipment. Do we have an equipment account in that trial balance? Equipment's balance is how much? $25,000. So this line is $25,000 long. Do you agree with what I just said? Now, it would be wrong to say that equipment was an expense this first year. To call that an expense the first year would overstate the expenses and understate net income and wouldn't be a fair measurement, because by its nature, this equipment is going to last a long time. Maybe 5 years, maybe 10 years, maybe longer. That's what this line is attempting to depict. So each time we record depreciation, these could be months, or they could be quarters, or they could be years. We record a little bit more of the depreciation expense each time, trying to say we've gotten some benefit out of that asset. In this particular problem, you could think of those as months. So $400 a month for 3 months is the $1,200 that we made this entry for as we move down that line. Now, if you fast forward that into the future and say we've done this some other time and we've done it some other time, then at any point in time, whenever you're measuring this, you would say that all of this represented accumulated depreciation. Are you with me or not? Each one of these individually is the amount of benefit we received that month or that year or that quarter. But collectively, all the depreciation that we've taken on that asset since we acquired it becomes accumulated depreciation. Now, there's another concept here worth mentioning. Is there an appropriate name for the rest of this line? If we were to be a little person standing right here, if this little person looked back, they'd be looking at accumulated depreciation. But what if this person looked forward? Well, let's use the insurance example that we just did on the worksheet. If this were insurance and this person looked back, they'd be looking back at insurance expense. But they would look forward to prepaid insurance that they plan to use up in the future, the asset portion of that. Now, apply that understanding to this one. Looking back is accumulated depreciation. There's a name for this. What's this portion of the timeline called? I got down on my knees in Monday's lecture, hoping you'd remember this the rest of your life.
Book value.
This is called book value. Thank you very much. This portion is book value. Not a very good name. A really better name would be unexpired costs. Did you hear the connection between insurance and this one? When this was insurance, this portion was unexpired. Remember that? Well, the same thing is true of this piece of equipment. This is the unexpired cost of that asset, the portion that I intend to use in the future, the amount of the asset. So as accumulated depreciation grows, are you looking at the screen? Yes or no?
Yes.
Then book value shrinks. There's less book value to benefit from in the future. Do you understand accumulated depreciation and book value better now? Good. So Ashton, in the entry that you made me, you credited accumulated depreciation. What kind of an account is it?
As far as
Asset, liability, capital, revenue, expense?
liability?
No? Want to use a lifeline? Matthew?
It would be a contra asset.
That's a question.
It's a contra asset.
It's a contra asset. It's contra to what account?
To equipment.
It's contra equipment. Accumulated depreciation is essentially the credit side of equipment. Did you hear her say credit equipment at the beginning of this entry? Yes or no? Did you hear me say there's merit in that answer? That's right? That's why. We want to credit equipment. We want to reduce equipment. But we've chosen to credit equipment, reduce equipment through its related contra account called accumulated depreciation. Paula?
So when you're doing the balance sheet, would you put accumulated depreciation and like as an asset or a liability?
You put it in as an asset.
Okay.
And the format that you would use would be to show the balance of equipment as some number, and then reduce that by accumulated depreciation so that the net result, either on this line or the line following, your choice, would be book value. If you're not showing me book value on a classified balance sheet, that's what your instructions were in the second problem this week. You need to find the right example in the book and show me that. Paula, did that answer your question?
Yes.
Good. Who's got one? It's good to ask questions in class. Then let's do another one of the adjusting entries out of the exercise. Exercise 3.7 says 2. 1/3 of the unearned rent revenue was earned during the quarter. Oh my. You had a homework problem last week about unearned revenue, didn't you? Do you remember what I said about the book saying that at this point? Did I like it? I'd rather them do that later. It's okay when I introduce things early, but it's not okay when they introduce things early. You know, I'm kind of weird. I didn't want to talk about that until next week. I'm ready to talk about it next week. But I chose this exercise. I've got to play this hand that I was dealt. Let's deal with it. Could you look in the T accounts, the list of accounts, excuse me, and tell me the balance of unearned rent revenue?
10,200.
I think in the accounts it says 20,000. Oh, it's 10,200. My eyes went crooked. You're right. 10,200 is the balance of unearned revenue. Yes or no? Now, every adjusting entry affects two accounts. You could think of them in pairs or partners. So there's two accounts here that we need to think about. Unearned rent revenue. And its partner companion account would be rent revenue. Yes? Now, we've even sort of had this conversation today. Some things we get before we use them up. Some things we pay for first, use them up. Some things we benefit from and pay for them later. We did accounts receivable on the worksheet. It was an accrual. We did salaries on the worksheet. It was an accrual. Some industries like to collect their revenue in advance because not collecting in advance is too risky. Once the service has been provided, we don't have any collateral to go repossess if they don't pay for it. Does that make sense? Let's consider TV advertising. So you're an auto dealer and you're going to advertise on the 10 o'clock news. So they run spots on the news for a week and then send you a bill to your auto dealership and say, you got to pay your advertising bill on the 10 o'clock news. Nah, we're not going to pay you. Are you going to go repossess their car to get payment for this? Did y'all hear how stupid that was? They're the ones who repossess, not the TV's repossessing them. You don't have anything to grab hold to. Some industries collect their revenue later. Some industries, you have to pay for it in advance. Advertising sometimes, newspaper subscriptions, magazine subscriptions, life insurance. If we look at insurance from our side, we have to buy the insurance first, but they're collecting the revenue first. I bought season basketball tickets a few weeks ago. Basketball season doesn't start until November. So they got my money at Mabee Center. Y'all with me? Holding my money. I'll get my tickets soon. But those tickets expire with each ball game that's played. Every time the basketball is tossed up at center court and the game begins, whether I'm in my seat or not, that ticket expires and they earn the revenue. You pay tuition. Every time class meets, the university earns it. True? Whether you go to class or not, the university earns it. You paid for your meals in the dining commons in advance. Every time they serve the meal, they earn it whether you go eat or not, because there's an expiration that's taking place there. So here's an example of unearned rent being collected in advance. Some industries collect the revenue in advance. Most of the time we've done debit accounts receivable, credit service revenue because we did the work. We didn't get the money yet. But this case is different from that. We got the money first. Debit cash, credit something, credit unearned revenue. Was the number 10,200? Now, in the case of rent, every day that passes, the landlord is earning that. True? Landlord make an entry every day to show what they've earned. Through the passage of time, as we prepare financial statements, we would want to update this account. What did it tell us in item 2? 1/3 of the unearned revenue was earned during the quarter. Can you make me an adjusting entry? Here's a timeline to describe the $10,200 that they paid us at the beginning. And we are 1/3 of the way down this timeline.
34.
Describe this for me. Earned or unearned? This portion is earned. This portion must be unearned. If 1/3 of 10,200 is earned, say that number for me.
34.
1/3 of 10,200, Nick, did I hear you say the number? 3,400, yes, everybody?
Yes.
Then how much is unearned?
68.
6,800, is that what you're telling me? I'm not doing the math, I'm relying on you. 6,800, yes or no? Now, these two numbers belong in these two accounts, but in which order? This one belongs in which account? In rent revenue, the earned account. As a debit or as a credit? Revenue's balance is, hello? Credit. And this unearned is a liability, needs to be in this account. The balance of this account, when we're finished, needs to be 6,800. So if you'll think it through, what we just learned is that this 10,200 needs to be 6,800. How can I get this account balance to be 6,800? Debit it for
34.
3,400 and credit revenue for 3,400. The earned portion is in the earned account. Both accounts are better. Now, I did it in T-account fashion to analyze it and think about it, but the journal entry would be this one. That's what you and I just decided together. If you're with me right this minute, good. If you've got a question on this topic, you ought to ask me right now.
Can you go back
I can go back to what?
to the other?
Yes, ma'am? For you to ask a question? Ask it.
Okay. We're using the 3,400, but why not express the 6,800?
Well, it's what you want to accomplish. So 6,800 is unearned.
Right.
If I make the entry for 6,800, I'm going to have a balance of 3,400.
Right.
This is what I want to achieve. I want the balance of unearned to be 6,800. Its balance right now is 10,200.
Right.
What does it take to get that balance from 10,200 to 6,800? It takes the 3,400. It's the same as the balance of prepaid insurance was a number. Supplies would be a better example. We didn't do one for supplies today. Supplies balance was $1,000 and 400 are on hand. Well, then you make the entry for 600
Yeah.
to get it to be 400.
Okay.
You see? So it all depends on what you're given to start with and what you want to achieve. And then it's kind of like a puzzle, figuring out what you need to do to achieve those results. With me? It was a good question. Who's got one? Rocky.
For you, debit unearned revenue for 3,400, is it mixed?
It is. Thank you. I wish I'd said that. Good, Rocky. What two things are all mixed together in unearned revenue before adjustment? Earned and unearned. The earned and unearned portions are both there, all stirred up. And if you don't do anything, you're going to overstate unearned and understate earned. It's better to make an adjusting entry to get both accounts and therefore both financial statements better. Good, Rocky. Thank you. Who's got one? We've got time for one more, I hope. In the book it says 3. Interest of 500 is accrued on notes payable. Who can make me the fastest entry? It's one of those passage of time things. Employees work for us, passage of time, and then we pay them. We owe money on a note payable. Every day that's passing, we're incurring more interest. But we don't write it down every day. That's too much trouble. Right before we prepare the financial statements, we want the accounts to be better, so we make this adjusting entry. Somebody needs to do it for me. An account title? Would you help me? How much is it?
For 500.
It is $500. We owe a note. In addition to owing the note, we now owe some interest. Would you agree to that? We're not going to increase the notes payable itself. It's a contract in writing. It's already signed, sealed, and delivered. Okay? But along with that note, every day that passes, we owe additional interest. We're going to debit interest expense for the interest that we've incurred. And we're not paying it now. We're recognizing that we owe it now. There's a balance sheet and an income statement benefit here. We're matching the right amount of expense with the right year, and we're increasing the liability on the balance sheet, recognizing that we owe this amount. Do you understand that? Do you see the parallel between this and salaries, how similar they are? They're both accruals. They're both because the passage of time caused this event to take place, but no cash has changed hands yet. I'm hoping that even though we turned it up a little bit, even though those are not the routine, simple ones we started the week with, I'm hoping that you handled that at the end of the week. Who learned something today? Hands up. Have a nice day.